Okay. Now I will be very specific. We have printed financial money. We haven't printed actual money. There's a difference between the two. One creates runaway inflation.
There's no difference between the two.
There's a bit of a difference.
There's
but
zero difference. So whether
That's like saying
I
go and open a credit card, I am printing money.
No, you are not. That is not the same thing. No. So the reason that is not the same is because it's coming from a credit card agency that has that money, right? And you're paying interest. That is totally different. Okay. There is no difference if the Federal Reserve has the Treasury print a physical dollar bill and gives it to you, or just enters a 1 in your bank account. There's no difference. That is money is money is money.
Debt. Well, one is a debt, right?
Both of them are debt.
No, they can go and print not debt money, but that's a terrible idea. Yeah, they can go and print money without having it backed by bonds, right? They can do that. They just don't because it's a terrible idea.
Actually, they do that all the time.
No, they always, at least recently, they've always borrowed it. Like it's always, they sell the bonds, and then that's the quantitative easing.
Quantitative? No. Okay. You're throwing a lot of terms that. Oh, okay. Hold on. Let's start here. Okay. So this is not a third-party site. Okay. This is Fred. This is the Federal Reserve.
Yeah.
It's not like a conspiracy site. It's not a right-wing site. This is the Federal Reserve. Okay.
Yep, I'm good with it.
This is M2. This is the money supply. So if you look at this, let me make this bigger here. What do you notice between 1960 and 1970?
It's pretty flat.
Yeah. What happened in 1971? Started to rise pretty quick, right?
Right.
And it hasn't stopped since, right?
Correct.
Okay. So this is to put it in a very simple sense. This is a chart of printing money.
Yeah, but it can't be simplified that much, though. It's not.
Yes, it can, because when you expand the money supply, you're expanding the supply of money.
Okay, so can I give you an example? So if I go and I make, let's say I go and I open a credit card, right, for $50,000, right? Now I only have to pay back maybe $500 of that a month. I'm making up these numbers, right? Now I have $50,000 more at my disposal, right? But my increasing cost has only increased by $500. So on paper, if you look at the amount of accessible money that I have to use, it's going to look like it went up. But the reality is, a good chunk of that I have to pay back over time with interest, right? And so when you cross-reference our actual debt, right, with the printed money, there's a reason we haven't had extensive devaluation of the dollar, and that's the reason. It's because at the same time that they're printing money, they are selling bonds at higher interest rates to cover that printing. So it ends up being a more of a fiscal printing than a functional printing.
Okay, hold on, sir, because I don't think you really fully understand what inflation is and all that good stuff.
Okay, let's jump past the printing for a second, right? To two core tenets of inflation, right? Two core tenets of inflation that are not definitive, but they often accompany it, right? Are the devaluation of the dollar and stagnant corporate profits. Because if everyone's price is increasing, no one's making any more money, right? It's like, oh, my stuff costs more, that's why I'm selling it for more, right? That's like kind of two general core tenets of inflation that says, hey, the price of everything is just going up and no one's really just trying to abuse the system here, right? It's just my shit costs more, your shit costs more, right? And so my argument against inflation is that we haven't had a weakening dollar whatsoever and that corporate profits have been anything but stagnant.
That is a lot to unpack. I don't even know where to begin. So the value of the dollar has consistently gone down since the creation of the Federal Reserve. Are you not aware of that?
No, I'm more so talking in like the past 3 to 4 years.
Yeah, it has. That's where the inflation's coming from.
Wait, the value of the dollar relative to what?
Relative to perception of the markets, relative to the strength of the bond market.
Sorry, I should have been more specific. I was specifically meaning relative to other currencies.
Oh man, what is your argument here? I don't understand because I'm not sure you understand how money is created, how inflation works, how the value of the dollar works, and how that's coming out today. Do you know what PPI is?
Yes, I do. Okay, this is what I'm talking about.
What's PPI?
The price index.
No, it's not. No. What is CPI?
Oh, the CPI, yeah, is the consumer price index. My bad.
Okay, what's PPI?
Is, yeah, I forget what PPI is. PPI is
it's the producer
price index. Right. Yeah.
So I can pull up a chart if you don't believe me. I would rather not go find one, but I can. Do you know that the CPI and PPI have been correlated since COVID?
Okay. If they're correlated on the broad spectrum, right? Then why, when you look at the individual companies, do you lose that correlation? For example,
give me a company.
Okay, let's go with Kroger. You can use macro. Okay, and you can use macrotrends.net. That's pretty unbiased.
Okay, here you go.
Gross profit.
So this is I'm looking at their margin.
Oh, no, okay. So no, I know the margin has stayed stable. But what I'm talking about is if you look at their profits, right? Look at their gross profit over the past 10 years.
I know why you're looking at the profit and you don't want to look at the margin. And the reason is it's people out there, the average American, especially people on the left, don't understand that. So they don't understand that inflation affects the cost of goods and raw materials and transportation and everything that goes into running a business. They think it only affects them. So that's why we look at PPI. But let me just break it down in a very easy way. So let's say you were making $100,000 in 2019, okay?
Okay.
And today you're making $150,000, right?
Okay.
You're making $50,000 more than you were in 2019, right? That's a lot.
Okay.
With inflation, does it feel like a lot? No, because your purchasing power has been diminished through inflation, correct?
Right.
Okay. So if I am a business owner and my profits in 2019 were $1 billion, and today my profits were $1.5 billion, I'm on paper, the actual number might be big, record big, right? But do I have the same purchasing power for energy costs, shipping costs, labor, all the things that go into running my business? Are those costs the same as they were in 2019, or are they higher, just like the consumer?
They are, of course, higher, but that's right. Revenue.
So if I were to talk to somebody, if I went out on the street right now and I said, "Hey, dude, why do you think the economy sucks? Aren't you making way more now than you were in 2019?" What are they going to say? Well, yeah, I am, but it doesn't mean I can buy the same amount or more because of inflation. How then can we not translate that into a business and see the same thing? And that's why when you look at PPI, you see that it's correlated with CPI. The same inflationary pressures that we see is also on corporations. And keep in mind, when we say corporations, 50 to 60% of quote corporations are small businesses. So
yeah, I'm not talking about that.
Whenever you say the word corporation in America, people think of Amazon, Walmart. That's not who we're talking about, right? So that is why on the left they want to talk about gross profits, because people don't do the rational thought in their head and say, well, my own salary is much higher, but I don't feel like I can purchase more. But they don't think that in terms of a business, because they may not run a business. This is why you should be looking at margins. And the reason I bring this up is, if I were and I just don't feel like making a Yahoo chart to show it. But you could see that in 2016 and 2014, the margins for Kroger were higher than they are now. So my question is, why was no one accusing them of price gouging back then?
Well, here's the thing, right? I understand what you're saying about margins, right? And I understand what you're saying about gross profit, right? But my argument is, if the gross profit is increasing at a commensurate rate, then why is the operating income relatively stable?
Because the operating income is also inflated. This is why you don't look at the raw number, because it's inflated. That's like if I were to say, oh, my 401k is doing awesome because I'm really heavy in the S&P and the S&P is through the roof. Well, a lot of that has to do with the AI boom, and the other half has to do with inflation. If there's more money in circulation, there's a lot more money to put in the stock market. Just because my 401k is up 20 or 30% or whatever someone's might be, that doesn't mean the purchasing power of my 401k is any stronger than it was previously. That's how inflation works.
Yeah, I understand that's how inflation works, but at the same time, it's so I understand what you're saying, but here's the thing. If that was true, right? Like you said, okay, I will use the example that you were giving. I made this much back then and I make this much now, and it's like, oh, well, I should have a lot more money, right? Why don't I, right? Because all my stuff costs more, right? So for me, I have the money that I bring in, which is how much I make, and then how much I spend, right? Which is then how much stuff costs me, right? So then the amount that I have afterwards is going to be my profit. So again, because of inflation, my own personal profit, if I'm my own individual business, right? Then yeah, I'm not going to have any more money in my savings because my profits haven't moved because the cost of my living has gone up with the cost of my wages, right? So when you look at a company, it should be the same thing. The profits should be stable because the cost of their stuff has went up with the cost of their operating expenses.
So can you explain me why margin is not a good indicator of that? Do you know how you calculate margin?
Yeah, you calculate margin. Well, margin is not a good indicator of that because
how? So I'm just to give you a quick background for me. I've been in retail for 20 years, and I'm a district manager. Okay, so I am responsible, along with my general managers who work for me, for the P&L of their stores, the profit and loss statement. Okay, so when I'm doing training with a store manager to go through their P&L, I'm looking at COGS, I'm looking at all of the costs. Basically, when you're done paying for the electricity, the inventory, the labor, for everything that it costs for them to operate that store, I'm looking at the net profit. Okay? Now, if that number is really high, but inflation is taking a chunk at it, as a business owner, wouldn't I really want to be looking at my margin percent, not the actual dollar amount? Because my costs are inflated as well? No,
you wouldn't be looking at your gross margin.
So if So if if in 2019 I had a store that usually makes $5,000 in profit for the year or for the month, we'll say for the month, and then in 2024 their profit is still $5,000, is that good or bad?
Wait, sorry, say that again. Oh, it's bad, obviously.
Why?
No, wait, no. Okay, so sorry, say that again. So you said profit of 5,000, right?
If I have a store that has a net profit at the end of the day of $5,000, we'll just say a year to make it easy. They do a net profit of $5,000 a year in 2019, and then in 2024 their profit is still $5,000. Is that good or bad for my business?
For the business, that's probably, but it's not good.
So why would it not be bad?
Because it's not necessarily bad because it's stable, because you're not going under, right?
Okay. But can I project into the future that I'm going to keep up with inflation if inflation is rising and I'm just staying at the same profit? What if next year I have to raise labor costs? Or what if next year energy prices go through the roof? Or what if happens? If my profits are just staying the same, don't I need bigger profits to maintain my business?
No. You need bigger revenue.
So for instance, I had a store that needed a new roof. Okay?
Right.
Can I just pay for that store? So that the cost of the new roof was $100,000, believe it or not. It's fucking crazy. I had an estimate.
Not too bad for a store.
The first estimate I got was $167,000. And I'm like, get fucked. No way. So I got two more. It was a isolated store, right? So I didn't have like 100 people to go get quotes for. I found 3 people. I got one for $97,000. So that store, the year before, their net profit was only $11,000. That's all they made in profit. How
it's a chain, right?
How am I going to pay for that roof?
Well, is this a chain?
Correct. Yes.
Right.
So if I can't pay for it at the store level, and at the same time, remember, it's still going to be in that store's P&L until they pay it off. Obviously, it's going to be divided. It's not going to be thrown into 1 year, but that means the company needs to pay for it, right?
Right, but that goes into the expenses. That goes into the operating expenses.
It does not, because it's not a normal operating expense. That's called a capital expenditure. Every company has different rules for that. The company that I worked for was any cost that was over $5,000 was going to be a capital expense. And the reason a business would do that is because how do you foresee capital expenditures that are large? Like, every winter we'll have somebody's heating system will just shit the bed and we got to replace it. That could be between $10,000 or $50,000. How do I predict that? I can't, right? The only way I can do that is if I'm a healthy company. I'm going to put away money for a rainy day. I'm going to call it my capital expenditure fund or account or whatever that happens to be, right? So this company was healthy. So when we did our P&Ls at the end of the year, I said, hey, you guys need to give that store fucking a new roof. I've been asking for 2 years. You haven't given it one. And the last guy who came out said, if you don't fix it, it's going to collapse in the winter when we get some snow on the roof. They had to come up with that money. They had to come up with $97,000 throughout the rest of the company. That's a lot of money. What if every store needed some capital expenditures that high? So if they run on slim margins, are they ever going to be able to pay for any sort of stuff like that? It's going to be really difficult, no?
Well, okay, so I 100% agree with you, right? So, but here's the question, right? Because we do live in a closed system, right? So
hold on, before you go, I want to give the opposite end of capital expenditures. You ever go in a retailer like what state do you live in? Or if you don't want to give me the state, give me the region.
No, it's fine. I'm over in PA.
Oh, okay. I had a store in Allentown. So,
Oh, nice.
Allentown's a perfect example. How shitty are retailers in that area?
I've never actually been, but I know of it, and it's pretty bad.
Right. So you go into the store, and the store looks like it was built in the 1980s, and they never did anything to renovate it, right?
Right.
Right. So you think a business is going to stay in business for long if they never like become modern? Probably not. At some point, if you're not keeping up with your store, you're probably not going to be relevant at some point. You're going to go out of business. Can we safely say that?
I think there's a little bit too many other factors, but I will agree that it's important to keep up with the business.
Correct. Products change, different things change. You need to keep up with the times.
Right.
So we remodeled the company I was with, and keep in mind this is a family-run business. It's a private corporation. Was not publicly traded. The cost for one remodel in Manhattan, for example, on either 4th or 6th Ave, maybe it wasn't even Manhattan. Some New Yorker in the chat is going to yell at me. But anyway, $2.5 million. Just a remodel store.
Yeah, I understand that.
So, who's going to be the central planner in DC to say, you shouldn't exceed this much profits? How do they know?
It is okay. So obviously, it's gonna to answer that question. I don't think it's meant to be a blanket. From my understanding, it's not meant to be some blanket restriction, right? Like, oh, you can't have margins over this, right? My understanding is it's really meant to specifically target, especially in like moments of crisis, larger companies that are obviously exploiting a situation, right? I don't think it's meant to kind of like be a huge tax on a bunch of mom and pop shops, right? I think it's really meant to be like, okay, obviously there's this crisis, obviously there's that crisis going on right now. Do not go and use this as an opportunity to just like rake in profits.
Okay, but when we're talking about PPI and margins, I'm showing you that there's no price gouging happening. And even in their investigation, it's really sad. I mean, I was reading left-wing media about Kroger, and the headlines all read the same thing. Kroger admits to price gouging. Well, even if you read their own article and not the headline, you would see that they didn't admit to price gouging. What they admitted to was raising some staple products above the price of inflation to counteract some losses in some other areas.
Yeah, that's kind of standard practices. I do concede that point, but I do.
So in other words, if I'm proving to you that there's no price gouging going on.
Well, I didn't say that there's no price gouging. I just said that's
the specific element. So I have showed you data that there isn't. Can you show me data that there is?
Okay, so yeah, if you just go to where you just were and then just look at my argument is that the gross profits, while what you're saying is not completely unfounded.
Well, you can't at the same time say what I said about gross profit isn't completely unfounded, but then continue with your argument that we need to look at gross profits.
Okay. Well, no, because
that's like saying well, I do concede that it's not unfounded that the sky is blue, but I'm going to continue with my argument that it might be red.
No, it's like saying the sky is blue, but sometimes the sky is actually red.
Because I'll just ask it as simply as I can. Does $1 billion in 2024 have the same purchasing power as $1 billion in 2019?
What are you buying?
Doesn't matter. Everything's gone up. I mean, if you want to talk about that, let's talk about energy. So does $1 billion in 2024 purchase the same amount of energy at the same purchasing power as 2019?
No, of course not.
Okay, so then why would we look at gross profit if we know that the number is going to be higher because it's inflated? But it doesn't mean that the purchasing power is any higher.
Because gross profit takes into account what you spent on energy already.
But everything is inflated. I
understand what you're saying.
Sometimes it takes. Listen, hold on a second. This is something I use in leadership roles all the time. Sometimes somebody else can explain what I'm trying to explain, but in a different way, and then all of a sudden it's like, oh, I got it. So I'm gonna bring up a pro. Jimmy, how are you doing today, or whatever? Trey.
Yeah. Can I go ahead?
Yeah, go ahead.
Yeah, I just wanted to say I'm a landlord, and every place I hear everyone talk about how these rentals, they're just gouging. My taxes have gone up 30%. My homeowner's insurance has gone up 30%. I can't even get tradesmen to come out, a plumber. Plumbers come out, it used to be 150 for a simple thing. It's 280, 310. Everything has gone up. And yet people tell me, you're making so much money because you're raising the rents. If you don't raise the rents, you're going to lose the place. And we haven't even gotten to the people who have, of course, adjustable loans. I've got my place paid off. Just as you're trying to explain to him, and I don't think people get this, and I love this conversation. I love both of you both. I love both of you. I think you all are both competent trying to give us some information. But if the price of your home triples, but you can only buy that home, you haven't made any money. I don't know why people don't get that. You shouldn't even be taxed on it, because if the home has gone up in value due to inflation, no one has made anything. And what's insane is that you actually have to pay taxes on inflation. People act like you go from owning one home to 3 homes. No, you go from owning one 28-year-old home. You own one 28-year-old home. Now you owe a 33-year-old home, and it's worth 3 times as much. What can I buy with it? Another 33-year-old home. And you're going to tax me on it unless I'm over 55. And of course, there's other rules. But I respect what the guy's saying. I do understand how the media has made it seem like people are making all this money. But where is the money? And everyone who used to make 80 is making 120. Everyone who used to make 120 is making 160. Everyone who used to make 200 is making 240. But the prices of everything has gone up with it.
Let me ask you, do you cover utilities in the rent, or do they pay the utilities?
Oh, no, I covered utilities once. I'll never do that again, because they will purposely run the utilities. But my point is not that
Imagine if you were. This graph that I have up now is the PCI and energy goods and services. This is it's hard to put on the screen so you guys can read it, but this is January 2017, and you can see the spike started in May 20th. But it peaked in June 2022, and it came down, but it stopped, and it's kind of leveling off. So it really never came. It came down, but not that much, right?
Yeah.
Can you imagine if you were still including utilities in the rent, how high you would be charging them in rent?
It's insanity. And again, I like the conversation. Look at someplace like Five Guys. They're not raising their prices to go out of business. They're raising their prices to keep giving the product, and they very soon will be going out of business.
Right.
Because it's too expensive. And people think, wow, they're not poor management. They're not. And so you have a company that was doing gangbusters and thriving and franchising all over the place. And now pretty soon they're going out of business. They're done.
And then on top of that too, if you're living in an inflationary, so the number one thing that is the enemy of a business, no matter what business you are, a landlord, a retailer, it doesn't matter. The number one enemy is the unexpected, because you can't obviously you can't plan for the unexpected, right? So you could also argue that in inflationary times, you actually want to make as much profit as possible, because you don't know what's going to happen next year. You don't even know what's going to happen next quarter.
Yeah.
In other words, if you're in an inflationary period, are you confident that the inflation's going to stop? Can you plan for that? No. So if I've been experiencing um, price increases for years, I mean, inflationary pressure, I actually have more incentive to raise prices more just in case. And I also need
What
to
do
fund my business.
what is your plan to protect yourself from possible inflation? What do you as a businessman, or what does your company say? This is what we're going to do.
Focus on margin.
Focus on margin.
Now, Jimmy, I definitely understand what you're saying, what you're talking about as a landlord, right? And so, I think where some of the, I guess, issue comes into play is that, not everybody's situation ends up being the same, right? So I think what happens is, you have some landlords where, yeah, their costs have gone through the roof. And so they have to jack up their rent, right? But, for example, I was living in Florida a couple years ago, and my landlord, his expenses didn't change. They didn't, right? I can see his taxes. I know what he did with the place. Most of the improvements that were done to the place, I did. You know what I mean? And I was pretty heavily invested in the real estate market at the time, and I just kind of had a good idea of. And he had bought the complex that I was living in, a couple years earlier, right after crash for like pennies in the dollar, right? The place, and he just bought it in cash. So the place was basically a zero expense for him. But, he, along with the, now you had, and, he basically increased the rent by almost 100%, right? Now, the place, couple doors down, they had recently made some renovations. And yeah, the city basically like more than doubled their taxes. I know the insurance in where I was living had kind of dropped a lot of had dropped a lot of people at the time. So if you could even get insurance, it was nearly impossible. And they were a much smaller operation. So they had also had, increased their prices. But I think part of the problem that happened was, and it's, I'm not really sure, and it's a tough situation at the end of the day. The problem is you have people who have to increase their prices, so they do. And then you have other people who are like, hey, look at this. I can increase my prices now because they're not going to be able to move anywhere else because everyone's going to have the same high prices. So the problem is you have people who are operating at the same margin in the same market with people who are now operating with super inflated margins. And I agree, there is no reasonable way to tease those two people apart, right?
But
But I think
they aren't super inflated margins. I just showed you Kroger, but I can
no.
show you
No, I'm
more
talking about like
Fultons.
no. I'm talking about like on an individual basis, right? Like one company, like in terms of what Jimmy was talking about with landlords, right? Like how everyone's complaining about the rent, right? I think where a lot of the complaints are coming from is you'll have reasonable landlords who have reasonable increase in expenses who reasonably keep up with their property, right? Having now these same prices as basically people who are running these slumlord operations being like, well, I'm going to jack my price the same price as them because there's no place anybody can go, right? So what's happening across the board is people are just having no place that they can go. Before, you used to be able to sacrifice location, sacrifice quality, sacrifice space, live in a tiny shitty apartment and pay tiny shitty apartment prices. But what's happening is you can't do that anymore, right? And so I think that's where a lot of people's discontent is coming from, because you have people who are, overinflating their own personal margins in the same market as people who are just keeping up with inflation.
I mean,
I don't know what you mean
I
by
can't speak to landlords across the country.
right.
So, I mean, that's a little bit more difficult to speak to. I do want to show
Right.
you this too, and then we'll go to some of the
Yeah.
new people I just brought up. Anybody in the queue that I know. I'm not meaning to hang you guys there. I'm specifically trying to bring up people I don't recognize, to see if they want to debate or anything like that, and continue the discussion. But here's another chart for you. You can see that the source again is Bureau of Labor Statistics. So this is the Biden administration's numbers. So you can see this. Let me put it on here so you can actually see. You can't see my cursor. All right. So that dark red line at the top is PPI. That's producer, right? Then you've got the orange one is also producer as well. You have the two greens ones. That's consumer price index, right? And you got the median CPI, and you have a lot of inflation metrics here with different things that they measure, different baskets. They take certain things out in one and put them in the other. But if you put them all together, what's really interesting is you see that the inflationary pressure on businesses since 2021 has actually been higher than it has on the consumer. So if to make a case for price gouging, or just, hey, you guys are raising prices higher than they should be, you would want to see the dark red line and the orange line be under the consumer, right? Because then you could say, hey guys, the consumers are feeling way more inflationary pressure than you are. Why are you jacking up prices so much? But in here you can see they actually saw an equilibrium, and it started to be around what is that, 1122, 123, and then it separated some more to the point where you could actually see they reduced their pressure went down a lot. And what happened? They started to feel the same pressure again. But you can see there is no, if you expanded this out to non-inflationary times, they pretty much link up pretty well. But again, inflation is unexpected. It causes a lot of chaos. It's a disruptor in the market. But based on this, and again, this is the Biden administration's numbers. This isn't Trump's numbers. This isn't some right-wing media's numbers. This is their numbers. This is further proof there's no price gouging going on, and that they're reacting to inflationary pressures just like consumers are. And again, ironically, this is showing that they have been feeling more inflationary pressures than the consumer does. And that's why I said to someone earlier, during these times, businesses usually focus on, if anybody's in sales or any sort of consumer facing, what KPIs are. Most your business right now has probably been saying, forget about the KPIs. I want you to focus on margin.